For decades, the image of the American dream included a dusty velvet box hidden in a sock drawer, containing a grandmother's gold heirloom or a handful of Krugerrands meant for the end of the world. But walk down 47th Street in Manhattan today, and the vibe has shifted. The preppers aren't buying, they are selling. In a paradoxical twist of irony, as gold hits record-breaking highs, surpassing $2,300 to $2,400 per ounce, middle-class Americans are rushing to pawn shops and refineries. It's not a panic buy, it's a desperate, or perhaps brilliant, harvest. The primary driver is simple mathematics. In 2024 and 2026, gold reached levels never seen in human history. For an average American family facing 20% cumulative inflation over the last few years, that gold ring isn't just jewelry anymore, it's 4 months of groceries or a significant credit card payment. When an asset hits a peak, the psychological urge to profit-take becomes irresistible. While the macroeconomy looks good on paper, the microeconomy of the American household is bleeding. Credit card debt. Total U.S. credit card debt has surpassed $1.10 trillion. Interest rates. With the Federal Reserve holding rates high, debt is more expensive than ever. Americans are selling gold because they are asset-rich but cash-poor. They have wealth locked in gold, but they can't pay a 7% mortgage interest rate with a gold bar. Selling is a survival mechanism to deleverage their lives. They prefer ETFs, Bitcoin, or simply paying off student loans. To a 30-year-old American, a heavy gold necklace from 1985 is better served as a digital balance in a Robinhood account. For the first time in history, gold has a legitimate rival for the store of value title. With the approval of Bitcoin ETFs, much of the speculative capital that used to flow into physical gold is moving into the digital space. Many Americans are liquidating physical gold to reallocate into high-growth tech stocks or crypto, seeking faster returns than the slow, steady climb of bullion. In the Western mind, the gold bug era, defined by a fear of systemic collapse, is being replaced by pragmatic liquidity. Americans are realizing that you can't eat gold, and you can't use it to pay for a Tesla or a child's university tuition directly. By selling now, they are capturing the highest valuation in history to fund a lifestyle that has become increasingly expensive. The mass selling of gold in America isn't a sign of gold losing its value, it's a sign of gold fulfilling its purpose. People buy gold for a rainy day. For millions of Americans, with inflation peaking and prices at record highs, that rainy day has finally arrived. The traditional textbook theory states that gold prices should drop when interest rates rise. Why? Because gold pays no yield. If a U.S. Treasury bond offers a 5% return, holding a yellow bar of metal that just sits in a safe seems like a missed opportunity. However, we are living through a broken textbook era. Even with high rates, gold soared. Americans, sensing this anomaly, are taking the gift of the market. They are selling their non-yielding gold to lock into high-yield savings accounts, HYSAs, or certificates of deposit, CDs, that haven't looked this attractive in 20 years. It is a strategic migration from static wealth to productive capital. An unusual phenomenon recently hit the American retail landscape: Costco selling gold bars. When a bulk grocery giant starts selling 1-ounce bars next to 30 packs of toilet paper, gold has officially entered the mainstream cycle. Historically, when an asset becomes a common household conversation, it is often near a local peak. Sophisticated American investors are watching mom-and-pop buyers rush into gold at Costco and deciding that now is the perfect time to exit. They are selling into the liquidity provided by the masses. It's the classic Wall Street adage, sell when the taxi driver, or the grocery shopper, starts giving you stock tips. There is a quiet, data-driven narrative happening in the background. The industrial demand for silver and copper is outpacing gold due to the green energy transition. Modern American investors are becoming more scientifically literate. They realize that while gold is a store of value, it has limited utility in the EV, electric vehicle, and AI, artificial intelligence, revolution compared to other metals. We are seeing a reallocation trend where Americans sell gold to fund investments in critical minerals and tech-heavy indices like the Nasdaq. They are betting on the future of silicon and lithium over the ancient prestige of gold. For years, financial pundits on American television sold gold through fear of a dollar collapse, fear of hyperinflation, fear of total anarchy. But the American consumer is experiencing fear fatigue. After surviving a global pandemic, political upheavals, and various economic scares, the average American is tired of waiting for the world to end. They would rather sell their gold, take the $2,400 per ounce, and go on a vacation or renovate their kitchen. They are choosing to live in the present rather than hoarding for a dystopian future that never quite arrives. Ultimately, the American public isn't abandoning gold because they think it's worthless. They are selling it because it is too valuable to keep hidden. In a high-inflation, high-interest rate environment, gold has become the ultimate emergency brake. It is the one asset that actually did its job. It preserved wealth when the dollar's value shrank. Now, Americans are simply collecting their paycheck from history. To understand why gold is leaving American homes, one must look at the vanishing safety nets. In the mid-20th century, a stable job often came with a pension that guaranteed a dignified retirement. Today, that is a relic of the past. Most Americans rely on 401k plans tied to the volatile stock market. When inflation spiked in the mid-2020s, the buffer between comfort and crisis narrowed significantly. Gold, for many families, was the last line of defense. We are seeing a trend where selling gold isn't a choice made at a luxury gala, it's a choice made at the kitchen table. When the cost of health insurance premiums and property taxes outpaces wage growth, the dead capital sitting in a jewelry box becomes the only way to stay afloat without taking on predatory payday loans. The American middle class is effectively liquefying its heritage to maintain its current standard of living. It is a quiet, dignified liquidation of the past to pay for the survival of the present. There is a profound cultural shift happening in the West, the decline of sentimental attachment to physical objects. The Millennial and Gen Z cohorts, who are now the primary economic drivers, value experiences, travel, dining, and digital status over the heavy, ornate gold jewelry favored by their ancestors. In the 1970s and 80s, wearing thick gold chains was a status symbol. In the 2020s, that same gold is viewed as clunky or outdated. This minimalist movement, popularized by figures like Marie Kondo, has encouraged millions of Americans to declutter. When they realize that a discarded necklace is worth $3,000 at a local refinery, the emotional bond breaks instantly. The younger generation would rather have a clean, aesthetic apartment and a high-spec laptop than a safe full of old-fashioned gold. This cultural pivot has turned millions of American homes into unintentional mines. People are mining their own closets, finding wealth they forgot they had, and converting it into the only currency that matters in a digital world, liquid cash.